Hi guys, this is Teacher Patty. We're continuing the conceptual framework and we are learning about expenses. So remember guys, conceptual framework, you can't learn it in vacuum. You have to break it into pieces so that you have deeper learning. So you just learn it in chunks, not in a big chunk, like small chunks. Okay. So definition of expenses, according to the 2018 conceptual framework, guys, not the 2010 one. So the moment you see depletions, it's the 2010 one. So let's stick to the 2018 one. So the 2018 one says an expense can be defined as or is defined as a decrease in assets or an increase in liabilities other than those relating to distributions to holders of equity claims. So decrease in assets, expenses such as depreciation, you are aware, ladies and gentlemen, that they reduce the value of an asset. So that is a decrease in assets. So that loss of worth in an asset or that loss of value in an asset, it must be recorded in the statement of profit or loss and other comprehensive income as an expense. Okay. That talks to amortization, that talks to also the the the, the the spoilage on inventory, the damages on inventory, for example, floods damaging inventory stored in the warehouse or inventory expiring before it's even sold. So that is a decrease in asset. So, and it also refers to the cash payments reducing the physical cash. So, ladies and gentlemen, we pay for expenses. Not all of them, like depreciation is not, it's a non-payment. Write-offs, they are non-payment, but other assets, we pay for them. So when we pay, there's there's a decrease in the cash that we have on hand or at bank. Take this for instance, when an office runs out of milk or for staff, tea, or it runs out of biscuits for guests, or it runs out of coffee or tea, they will ask the receptionist or the go for girl or go for boy to go and buy such little things from the driver. Let me not use the go for girl or go for boy. The driver to go and buy these things from a retailer or a supermarket. The money that is given to the driver, that is a petty cash. So that is the money belonging to the business. That is the money belonging to the business. So if it's given to the driver to go and buy milk, biscuits, coffee, tea bags, we don't have the same money we had before those were purchased. We have given away business money to acquire an expense. So it goes like that. Even those like salaries. I mean, you don't work and expect to be paid. Like, you don't work and expect guys to be paid um, by a chair. You worked, imagine I'm a lecturer and then I get paid, I'm given a chair. What am I going to do with the chair? I'm working to get money. So that money that moves from the university's check account to my check account, uh, it's a decrease in the assets when we are classifying expenses. So I hope this makes sense to you. So expenses also can be as a result of liabilities, increase in liabilities. So you are aware when we're talking about income, and I'm gonna show you now in our show and tell. When we're talking about income, we said the increase in liabilities. Oh, we were talking about the decrease in liabilities, saying if Mr. Price would pay all its debt, it would not have to pay interest. Therefore, the profits will be higher. In the case of expenses, because Mr. Price has an increased debt, as an example, because Mr. Price has an increased debt, so it has to pay finance costs to service the debt. So the expense of the finance costs, the expense of the Once off cost is coming because of the debt that has been incurred. So that's why they're saying expenses is either the assets have decreased, it's the decrease in assets or the increase in liabilities. It can be one of the two happening and then resulting in an expense being created, and then says other than those relating to distributions to holders of equity claims. So that speaks to expend dividends paid by the business to its owners. We will not record that as an expense. That's distribution of equity. Okay, drawings taken by owners, we will not record that as expenses. That's part of equity. So let's go to our show and tell if I still have it open. Okay. Let's look at this cost and expenses. So Mr. Price has its cost sitting here, cost of sales, selling expenses, administrative, and other operating expenses. So I opened the National Lottery Board in the other example, and it just shows, yeah, I think it was the example on different types of expenses. So it just shows the different expenses the National Lottery Board has. So if you're looking at administrative and operative expenses, so those include your salaries, those include your repairs and maintenance, your fiber and internet fees, your telephone costs. It's just that they just summed it up to be that. So guys, I hope you never struggle. You never the definition of the conceptual framework. Thank you. Bye.